Hey, what's going on, guys? Welcome to the sit down. I'm sitting here with Josh Pinard from Paragon. We're here in the law office of Robert Carter. He's our host for today. So today's episode, I wanted to talk to my first-time home buyers with regards to talking to a lender. What does that look like? And so that's why we're sitting here with a professional. He's one of the best in the business, and I want to have a sit down with him and go over what is being a first-time home buyer all about when you're working with a lender. So I'm here with Josh. We got a few questions, and he's happy enough to explain some of these questions that we have. Now, first things first, as being a first-time home buyer, one of the things that you want to know is, what should your credit score be? And with that, what should we be looking for as a first-time home buyer? So Josh, what would that look like? I'm a first-time home buyer. I have a credit score. I don't know what would I need in order to start buying a house?
Absolutely. Well, first off, thank you very much, Matt, for hosting us today, and for Rob for hosting us here in his office. So we greatly appreciate that. But the biggest thing here is when we're talking about starting the process of buying a house, and you're talking about credit scores. Everybody's always nervous about getting their credit pulled, and where their scores are at and how high they have to be, and what types of debts they need to have, or what trying to get rid of debts, or collection accounts, or judgments, or bankruptcies. There's so many things that go into credit scores. But from a baseline perspective, in order to at least go through the process and getting pre-approved, you actually have to have a credit score of 580 and above for an FHA mortgage. Now, there's certain lenders out there that will have overlays, or there's specific guidelines that go into that. So, for us, we have 600 as our minimum credit score. Some lenders are 620, 640. I've seen 660. It really depends on the lender and what their risk tolerance is. But for a first-time home buyer, when you're looking at your credit scores, or you're looking at your credit report, understanding, okay, there's the tri-merge credit report, and understanding that, hey, my middle score needs to be at least above 580 in order to qualify for an FHA first-time home buyer mortgage. So on top of that, though, there's a lot of people that don't have, a 580 or higher credit score. So what do? So, if they contact us, we work with them, try to provide tips, tricks, things to get their credit scores up. We also work with certain companies that are designed to help people boost their credit scores. And that's kind of what we specialize in. Is it doesn't matter if you have a great credit score to start, or you're just starting off and you don't know where to begin. We're here to help you, guide you through that process to get your credit score in a spot where you can start to navigate the home buying process.
Yeah, I think that's perfect, because I think so many times first-time home buyers, the whole buying a house process really scares people.
Yeah.
So I think it's just important to remember that everything is just a process, and it's getting in front of the right people, getting in front of the right professionals to kind of guide you through that process. Now,
Exactly.
Let's say I'm buying a house and I'm looking for some money at closing, maybe something like a grant, like a first-time home buyer grant. Are those available, and what would that look like?
Absolutely. So for first-time home buyers, there's some certain products and grants that are out there that are available for you. So from a first-time loan basis, you have FHA loans. You have some home ready or some home possible mortgage options that are low down payment requirements, low credit score requirements that allow you to get into either reduced MI on some of those products, or mortgage insurance for those who don't know what MI is. So there's some loan options that are available out there for clients that are first-time home buyers that don't have a lot of money to put down, that don't have the best credit scores, that are looking to build and grow their family and get into that first house. Now, for the grants perspective, there are a few programs out there. There's Home Headquarters. That's a company out there that offers grants and loans to people to help with their down payment or their cash to close and their closing costs. There's some Sunny Mae products out there that offer those. And then there are some specific lenders out there that may do promotional grants throughout the year based off the demand and what they have to offer. So if you're looking to potentially get some help towards closing or some grant options, Home Headquarters is a great place to start. Just make sure it's a grant option. Sometimes it takes some time. You have to apply and go through that process. So it may not be right away. You may not get it as soon as you contact them. But if you go through that process, you apply, they'll give you kind of the steps of what you need to do and see if you qualify, or if you don't, they'll generally offer a loan to help offset some of that, cash to closing costs.
Oh yeah, definitely. And grant options are always a good first home buyer option, especially if you don't have, money for closing. I mean, that's an option. And it's a readily available option for a lot of people. I know that upstate New York just put a little bit of money into home headquarters.
Yeah.
So there's a lot more grant money involved. So if you are looking for a little bit of grant money, those do fall off. There usually is a time restriction associated with them, but that is definitely an option that you can go through. Now, I got my credit score up. I'm looking good. I got that 580 and above.
Yeah.
What kind of savings should I be expected to have to buy a house? So, like, do I have to have $100,000? Do I have to have $10,000? I mean, what would be a good estimate of a little bit of cash to have to go out and buy that house?
Yeah, absolutely. Savings, retirement funds, investment accounts, all that is, taken into consideration when you are applying for a mortgage. But when we talk to people, we really emphasize having the understanding that, hey, you're going to need this much for your down payment, this much for your cash to close and closing costs, and this much for prepaids and escrows. And then you're going to need things for like moving expenses, repairs, updates, things unexpected, travel expenses that you need to move from one place to another. So there's a lot that kind of goes into it that we try to emphasize that, hey, don't just go in with everything that you have to buy this house and have nothing in reserve, because that hot water tank may break. You may need, your heater fixed. You may have a leak. You may have something that needs to be replaced. And so that's where it's really important to kind of understand the numbers and what that really entails, because the last thing you want to be is, getting into a house and now you don't have any money to pay for those things as they come up. So when we talk to people, down payments for like an FHA, you're talking 3.5% down. You're talking on conventionals, there's some 3% down options. VA and USDA, they have some 100% down options. So if you're a veteran or if you're looking at some rural areas and you qualify on the income side, you can look at some 0% down options. So down payment wise, if you're buying a house for $100,000 and you have to put 3.5% down, that's $3,500 right there. On top of that, you have your prepaids and escrows. Generally speaking, taxes on a $100,000 house is going to be somewhere around $3,000, $4,000, $5,000 a year. So, you can expect to bring in, another $3,000 to $4,000 just in prepaids and escrows for your taxes. And then your insurance is maybe another $600, $700, $800 a month for a $100,000 house. So it's another, $600, $700, $800 you have to have at closing. And then closing costs are, third-party fees associated with actually buying the house. So it's things like New York State tax, it's things like your appraisal, it's your credit report, it's title insurance, it's your attorney costs. So there's a lot that goes into that, and you can expect that to be, somewhere between a couple $1,000s, and depending if you're paying points or whatnot to buy down your interest rate, you could be looking at, $5,000, $6,000, $7,000, $8,000 for closing costs. When you really add all that up for, a $100,000 house, if you're not getting any seller's concessions or grants or anything along those lines, you could be really looking at, coming up with say $10,000, $15,000 to buy that first house. And then on top of that, you really got to think, okay, well, my mortgage is $800 a month or $1,000 a month or $1,200 a month. That's due on the first of the month, after I close. Okay, well, so I got to prepare for that. I got to prepare for, moving expenses. So there's a lot that kind of goes into that behind the scenes that we really try to help people understand.
Yeah, I definitely think that's and it's good. I mean, it's having that little nest egg.
Yeah.
I mean, it's a small little nest egg, but for your first time home, I think, having around $10,000 for closing costs, moving expenses, it gives you a little bit of a wiggle room that gives you the flexibility that if a delay happens, if something happens, an emergency fund, you have a little bit of cushion just to kind of keep the ball rolling on that.
Absolutely. Just to add one more thing there, there's a lot of people out there that follow guys like Dave Ramsey out there that emphasize 15-year mortgages, putting 20% down. Your debt-to-income ratio should only be so much of the housing payment, 25% and less, things like that. So if you're somebody who's a first-time home buyer and you're thinking, okay, I'm struggling to save up $10, $15, $20, $30,000, those options and striving for that is great, but then you have these options for first-time home buyers where it allows you to get in there for a little bit less if that's more what you're looking for.
Oh yeah, for sure. I feel like it's definitely important. These those having a little bit of cash, especially if you're buying a house, is definitely important. Now, let's say I got everything ready to go. I got my cash, got 15,000 in the bank. My credit score is looking good, and I'm finally in the path to get my pre-approval.
Yep.
Now, what are some documents that I should be ready to give you to get that pre-approval?
Absolutely. So documents, that's a big part of what we do for the pre-approval process. We also offer a platinum pre-approval, which is basically a pre-underwriting of your file. So that way when you submit an offer, it's basically telling the seller like, hey, your offer is standing out because you're not going to get denied. You're pretty much pre-approved, or you're pretty much going to get a commitment letter within a few days. So we offer that. But in order to get that pre-approval or to get that platinum pre-approval, we need things like your last, 2 to 4 weeks or 2 to 4 pay stubs. We need your last month or two of bank statements. We need your 2022 or 2021, 2020 W-2s, 2021, 2020 tax returns. As we go into the new year here, it's going to start to be, all right, well, now we need 2022s. We need things like homeowners insurance quotes. We need the purchase contract. If you have child support or if you have, alimony, we need the divorce decrees for those. So it really depends. If you own other property, we need, the current mortgage statement for that, or we need, the insurance or taxes on that particular property. So it really just depends on what the individual situation is. But that's a great baseline of documentation that we need in order to get you pre-approved or platinum pre-approved, or getting you to the process where you can, submit that offer and we can submit your application once it gets accepted.
Perfect. And this is why this is so important to a first-time home buyer, is because this is that first step that you need to take in order to start working with your real estate agent. And this is that first step, because realistically, if you're out house shopping, you're going to want to know what your left and right limits are before we just start looking at multi-million-dollar mansions. You want to make sure that, you can get the in-ground pool before we go out shopping for one.
Yes.
And that's why it's just so important to start talking to your lender and then getting that actual number in front of you and saying, hey, this is what we have. This is my limit. And that's basically it's your golden ticket to go house hunting. At that point, now you've got a rock star lender, you're going to have a rock star agent, and you're building your team. At that point, you are building your team to start your home buying process. Yeah. So it's so crucial that you talk to somebody like Josh. You talk to a really qualified lender who knows what they're doing, who has a rock star team. Rock stars know rock stars. So it's important to make sure that you're getting in front of the right people, you're asking the right questions, and if you don't know, talk to somebody like us. We will get you the right answers to make sure that if you are shopping for a $500,000 house, that you're qualified to buy $1 million house. Yeah. It's simple steps that ultimately are going to help you in the long run.
Exactly.
And it's just one of those things that it's important to remember. Understand the process and understanding exactly what you need to do, and just working with that team.
Yeah. Yeah, when you know the numbers for your payment and your cash to close, and then hey, I'm working with professionals that are working in your best interest and are really going to be those rock stars on your side, it makes the home buying process super smooth. So, Matt, myself, we're here to help you guys out with your home buying process. He's a rock star in himself, and so just knowing that information is huge. So that way you're ready to go.
I appreciate that. Well, that is it for today. This is the Sit Down here with Josh Pinard again, host, Law Office of Robert Carter. And again, if you have any questions, concerns, please reach out to us. And as always, stay free.